Hello, and welcome to Livewire's Fund and Focus. I'm Huntsley, and joining me today is Steve Bennett of Charter Hall. We're going to be discussing his insights into where he is seeing value in the property market and the REIT sector of the ASX, as well as a deep dive into the Charter Hall Deep Value A-REIT Partnership 3 Fund. Welcome, Steve.
Thanks, Hans.
So, REIT share prices, why don't we just start with that? They've had a fabulous 12 months. So, from your perspective, do you see this momentum continuing for listed REITs? And if so, why?
Look, we think it will continue, but clearly the market returning another 40% per annum isn't going to repeat itself in the near term. What I would say, though, it's coming off an exceptionally low base. There's only been 3 times in the last 25 years when, in our view, A-REITs have been this cheap. You've had the GFC, COVID for about 30 seconds, and then you had this recent period of A-REIT pricing. So, look, it's bounced back, but there are sectors that we're looking at, as the name says, deep value, where we think not only there's value in the assets, but certain listed stocks have funds management platforms and sizable funds management platforms that the market's valuing at zero.
Yeah, no, absolutely. Let's talk the inverse then, I guess, the headwinds. What are some of the headwinds that are still impacting the sector, and how is this shaping your positioning?
Yeah, pleasingly, most of those headwinds are now in the rearview mirror. Things such as higher debt costs, construction costs, they've started to slow down. Interest rate levels have really been the dominant story for the industry over a long period of time. We do think that there's significant value still there in the market. We are positioning DVAP 3 to try and remove some of that concentration that the index has. So Goodman, GMG, great stock, but it's now 39% of the ASX 200 index. If you look at the next top 5 stocks by market cap, they're a lesser percentage than Goodman. So we've tried to position the fund to not only pick up some of that deep value opportunities that we're seeing, where we still think the market correction has been too strong, but also make sure that the diversification and spread of returns is a little bit different to, say, the benchmark.
And we should just clarify, Goodman Group is 39% of the ASX 200 REITs sector, or the REIT index specifically. Speaking of REIT sector and speaking of value, I mentioned that this is a deep value fund, so I can't not ask you this. What does deep value mean to you, and where are you seeing that deep value in the sector today?
Yeah, a common misconception is deep value is just a discount to the independent or valuations of the underlying properties. When we look at value for a stock in real estate, it's a combination of the underlying real estate and then other income streams. For example, some of the managers have great development pipelines. They throw off regular and growing development profits. And also, as I just touched on, funds management businesses. A group like Dexus, funds management business, around $40 billion. Mirvac, around $15 billion. The market, in our view, subscribed no value to those. And the way our portfolio managers look at those things is, depending on the quality of those businesses, the regularity, and the growth prospects, we'll assign somewhere between 3 and 10% of those funds management business or FUM into the value of the asset, typically about 5% of the FUM.
Okay, so you're talking about Dexus and Mirvac. Would you say those are examples of the deep value opportunities you're finding in the listed REIT sector today?
They are, but even take Mirvac, for example.
Sure.
We took some money off the table prior to their group announcement because we were a little bit concerned where some of those apartment completions would be. It is a great stock. We've got around 9 to 10 stocks that moves in and out that we think are around 15 to 30% below their intrinsic value. And we think as we hit that peak interest rate certainty, and actually they're expected to come off in 2025, you will see some of that gap close. So we're not talking long-term timeframes to reach this. In fact, this fund has an investment timeframe around 18 months where we think we can deliver that 15% IRR for our investors.
Okay, and just to clarify that for me, obviously you're talking about listed markets there. Does this fund also invest in unlisted property as well?
No, it's purely enlisted.
Enlisted?
For those investors who meet the wholesale investor test, so it's done under an IM, this is something you can consider. It's not for retail clients, but the way we've structured the portfolio, we think we're picking up the real benefits of the underlying sector. So some of the highest quality institutional grade real estate in the country in a liquid form, but we've removed some of those asset-specific concentration issues that you get when one stock is 39-40% of the index.
Yeah, absolutely. So that's worth clarifying as well. Speaking of risk earlier, I thought this was a good segue into a question that I did have about risk. How do you think about risk? And I guess, can you talk us through an example of a position you have sold out or reduced with this in mind?
Yeah, look, risk changes over time as well. So if we go back a couple of years, we were much more focused on covenants, interest rate, covenant ratios, loan to value ratios. I think what most of the market has done really well is kept their gearing well within their target ranges. Yes, some may be a little bit more elevated, but if you think we're at the bottom or very close to the bottom of the cycle, that's not a particular big problem to have. Most of the risks, we are a bottom-up valuation manager, and we'll then leverage off Charter Hall's exposure. Many people aren't aware Charter Hall is the largest owner of real estate in the country. We have 1,600 assets, and what it means is our portfolio management team in the REIT space get great information on what's happening with tenants, demand, leasing spreads, and so on that most market participants don't have.
Yeah, no, absolutely. So do you think that is the one thing that makes this particular fund unique with respect to the rest of the space, or is there something else that makes you?
No, I think that's probably the biggest driver. So we do have specialists in this space, and they manage capital in the REIT portfolio on behalf of our high net wealth clients, but also some of Australia's big institutional investors. I won't name them, but some big super funds have given us quite considerable mandates because they still see value in this space. But clearly, having access to that underlying expertise with 600 real estate professionals throughout the country, understanding structural changes if and when they happen in leases with major tenants, where we're seeing transaction volumes, we've got internal research in terms of rental growth, supply, demand. That is something that just about no one else in the market can replicate, at least on the scale that we have.
So just wrapping this all together, Steve, obviously for investors who are qualified and are able to take on this opportunity, how can those investors access this?
Yeah, I think firstly, understand the fund. So there are some characteristics of it. It can only hold 20 stocks. We'll only focus on stocks that are more liquid, so minimum market cap of 250 million. And we make sure, as I've said before, we've got diversification where a single stock can't be more than 10% of the portfolio. One of the real advantages of the portfolio management team at Charter Hall is that we're agnostic to the sectors, as I've previously alluded to. Charter Hall is a listed real estate stock. We manage 3 other listed real estate stocks, CLW, CQR, CQE, but 2/3 of the money we manage is unlisted. So if we combine all that, our portfolio management team across 1,600 assets have the best data set of anyone in the market. It means they can pick up trends and identify value for the benefit of DVAP3 investors much earlier than other market participants.
True diversification. Steve Bennett of Charter Hall, thank you very much for joining us. And thank you for joining us. If you enjoyed that interview, you can subscribe to the Livewire Markets website, as well as our YouTube channel, where you can find more funds in focus. Thanks for watching.